Hey, this is John Lowe from the 2018 30K Challenge. I want to do a trade review on QQQ where I made $42. First of all, let's read the disclaimer. And let's get into it. I traded long on the QQQ when it went down almost like 2 points, around really close to about within a penny or a dime of the daily 100. I figured that it's gone down 2 points. It needed a spot to turn around, and I thought other buyers would be bullish around that level and buy it up. And so when it started going up, I bought in. I bought 3 contracts at 80 cents per contract. And it went as high as $1.05, which would have been a 31% return on investment in 12 minutes. But I ended up selling it as it came back down at 93 cents. So I ended up locking in a 16% return on investment in 18 minutes. Now that is a huge return. A huge return if you have the skill to do this. So let's talk about this. The power of options trading on Friday expiration. These options, they have a limited time of value, and Friday, which was yesterday, was the day they expired either in the money or out of the money. So if they're out of the money or very close to out of the money, they're very inexpensive. But these can be very risky. If you trade options that are not liquid or have a big spread, you can lose 30, 40, 50, 60% of your option premium very quickly. And if you get stuck in that and you have time decay working against you on Friday, the value of your options begin to decrease as well. So you really have to know what you're doing when you take this trade. If you're going to go long or short or whatever you're going to do, you really need to know the setup that you're trading. Anyway, once again, I bought the contract for 80 cents per share. The deltas were 75 cents per point. And what the deltas means, part of the Greeks, it means that for every dollar that QQQ moves, my option price will go up 75 cents. So if I were to buy it, at 80 and the QQQ went up $1, I could have almost, 90% return on investment, over 90% return on investment probably. All right. So that is really huge. That's really powerful. Where can you do that? Where can you do that? Except with options expiring on Friday. Okay. It's really risky, but there's huge returns if you know how to do it. And we're going to go through some other cool stuff later on. But let's get to the chart. So here's the daily 100. I mean, this is a really close view as a 1 minute chart. This has already come down about 2 points, and we're going to review that later. But, as you can see, it came down to right here at 162.37. And when I saw that, and I saw the daily 100 here at $162.26 per share if you bought them in the open market. But because we're trading options, I can buy one share, or I use 80 cents to control one share of the QQQ. So basically, I bought 3 contracts right here. And if you want to see where I did that, I bought them right here. QQQ, 80 cents. I bought 3 contracts here. So 80 cents times 3, I'm in this trade for $240. The worst that can happen to me is I lose $240. I will probably exit this trade if I lose 10 cents. So 10 cents times 300 shares, that's $30. I'm willing to risk $30. It's not a big deal. And like I said, I exited the trade, 18 minutes later at 93 cent credit. So I made 13 cents, which is like 16% return on investment in 18 minutes. So let's go back to this trade and take a look at it again. My stop is below here. I'm entering here as it starts going up. And at the highest point at 163 even, I should have sold. I was up like $100, I should have sold. It would have been a great return on investment. But what I was hoping, this is a daily 20 MA, it'd come down here, find support, bounce up, and then continue up. And it did. It hit here, closed here, bounced up, but it hit this 50 here, the 50 SMA on the 1 minute chart. And then when it opened, it started coming back down. I said, forget it. I got to get out. This usually does not shoot all the way back up on the first shot. It doesn't. And, you get a nice little run up, and then it sells back off, and it maybe comes back down, then it shoots up again later on, and we'll go over that. So I said, I'm not going to hold it back down to here and lose all my profit and then, let it turn green on me. I just sold it right here for 16% return on investment, $42. I used up one trade. It probably really wasn't the best trade ever, but look at this, guys. This thing's only moved, like 40 cents, 60 cents, you know. It probably did, I probably end up getting in here or something like that, probably. So if you look at it, maybe it went 50 cents, it was up like 20 cents. I ended up selling it for 13 cents profit here, right? So this is just a 50-cent move, a 50-cent move on the stock, but it was like a 25-cent move in the option itself, okay? So let's switch to a 2-minute chart. Let's go switch to a 5-minute chart. So here's the trade I had over here. And, I was smart. It comes down, shoots up, comes up above the 5-minute 9 EMA, hits exactly at 163, should have sold it, and then it gets subsequently just sells right back off here, I didn't trade this again live in my real account. I tried to take it live in my demo right through here, and I got stopped out here for a $12 loss on 200 shares or something like that. But really, this is probably would have been a good trade back up here. But look at this right here. See, I marked this as 163. This is what we call technical analysis here. So 163 again, right? It hit that, came back down. What does it do right here? It hits 163 again and rejects back down. And this, you could have had a pretty good risk versus reward if you wanted to take this short, because once it broke below, it didn't really bounce hard off the daily 100, and it sort of grounded here before it found support. And once it hit here and rejected, and let's look at the 1-minute chart on that level here. Came up here, spiked up, and it got knocked down pretty quickly. On a 1-minute chart, this is the wick got knocked down, 12 cents pretty quickly, and then it just sold off hard. You could have, gotten short, maybe not here, maybe a little quick little retest. You can see it's at 162.83. You can say it's a 20-cent stop to 163. Anything above 163, you can get out. It is a legitimate level because intraday it hit this level again and bounced back, and you could have picked up, what was end up being, if you went all the way down here, if you were able to hold it all the way down there. So this thing went down $1.25. $1.25. Now think about this. I got in mine for 80 cents. And I told you the deltas were, 75 cents or something like that. So you could easily got short, for about 80 cents. It went down over a dollar, and the delta you could have made, dang near 90% return on investment, from, around here, around 1356. And if you would have held all the way down here, probably would have sold down here somewhere. You could have, in a little bit more than an hour, you could have made 100% return per contract. So every $80 you risked, you could have made another $80. Well, let's say not 80, let's say, 70. But still, where are you going to get a 90% return on investment on that? Okay, that's sick. And that is, the power of, technical analysis if you know what you're looking for. Okay? You see that is this happens all the time, and you just have to learn how to draw these levels out. So look, I made 16% up 31% on this small move, and that's really from, let's say, from here to here. Okay? So easily, you duplicate that, that's, there's 60% right there. 60, 70% right there. So yeah, so what I'm saying, it is true. It's totally legitimate. Okay? So let's look over here. I'm going to show you this. We're going to end this pretty soon here. It's really important that you draw out the pre-market high and the pre-market low on the charts here. So the pre-market high, this is in this gray area, that's the pre-market high, no price action above that, okay? Here's a pre-market low, no price action below this during the pre-market time, okay? Once this breaks through the pre-market low, this is short. This acted as support here, but once it broke through it here on this 5-minute, it acts now as resistance. So it came down for, 5, 10, 15, 20, 25, 30, 35, 40, 45, almost an hour. But an hour later, does it not hit the pre-market the pre-market low and rejects immediately down? And if you look at this move, how big of a move is this? This is like 2 points. It's like 164 all the way down to 162. So actually it's not 2 points. It's $1 and 60 cents. So 160, $1.60 with a 70 delta, and you get in at let's say 90. That's over 100% return on investment in from 1040 to 11:25, less than an hour. So it's like, I don't know, is it 45 minutes? Where can you get a return on like that? Okay, if you use the technicals, you know where you're trading, and if it goes against you, if this goes up and it rejects here, you get in, and if it goes above here, you're out. You're risking short here, you're out above here if it goes there. So you can short maybe below, like there's 64 cents right there, 164. Here's 164.07. Maybe you want to get short once it gets below 164, the whole dollar, and then now your stop is 10 cents away. And this thing just flushes completely. Now, if you didn't have this level, or if you didn't draw this level, the 50 SMA, how would you know? Well, let's say you didn't have any lines, no technical lines. How would you know this was going to reject right here? What's significant about this number at 164.07? So this is really powerful when you draw these horizontal lines, using these technical levels. All right. Anyway, that's really all I want to say. Um, drawing the pre-market low, pre-market high is important. Drawing the intraday pivots at 163 when you see them is huge. You never know when they're going to come back to play later on. And watching moving averages. Well, we didn't cover that real quick. Let's try to cover that real quick. Watching the moving averages. Oh, nuts. I eliminated all the lines here. Let's see here. Well, we'll have to go through that another day. But anyway, hey, hope you like this video. Hope you, you really get sold on technical analysis and how you can use it to make a really low risk versus reward setup. Okay, go check out my buddy Ed Martin at Average Joe Trader. Check out my buddy at Taylor Horton at FocusTrades.com. We'll catch you later. Bye.